Assalamu alaikum, dear students. I hope you're doing well. This is your accounting coach, Ahmed Raza Dharolia. Students call me ARD. So, the topic of the day is clubs and societies. Now, what are clubs and societies? And societies are basically not for profit organizations, also known as NPOs, non profit organization, or not for profit organizations are organizations that are made not to earn profit but to achieve some other non financial objectives. It can be objectives relating to healthcare, it can be objectives to promote maybe an art form, or maybe to work for the underprivileged members of the society, such as a charity, or it can be a musical club, or it can be a sports club, and something like that. Okay, so not for profit organization is an organization that is not meant to earn profits, although they can earn profits and sometimes they can earn more profit than an actually profit making organization actually achieves. So what is an example, sir? The classical example is Cambridge CAIE's examination board. Okay, it is a not for profit. So what do you think? Cambridge doesn't charge any profit, doesn't earn any profits? Yes, Cambridge earns lots and lots of profits, millions or maybe billions of dollars. So why they are called not for profit? So no one made Cambridge just to make sure that they can earn profits. Okay, profit was not the primary objective when the Cambridge was formed. Secondly, it was formed to promote some sort of education. And thirdly, whatever profit that we make from Cambridge is actually reinvested for the same cause and for the same purpose. Now, as far as the accounts are concerned, in a not for profit, we basically make two types of income statements. Now, the first type is known as refreshment income statement. Right now, we are discussing the concepts and formats relating to clubs and societies. So, first of all, we need to learn how to make an income statement, also known as profit and loss statement. So, what we use the word, the examiner uses the word refreshment, or it can use the word canteen, or cafe, or shop, or bar. Everything is the same. Okay, everything is the same for the purpose of accounts. Now, how to make a cafe or refreshment income statement? Beta, we are going to start with the sales. Okay, so the sales would be for what? Beta, the sales would be for the canteen, for the cafe. Okay, sales or revenue. So most of the time it's only cash sales in here and not a credit sales. But but if we have a credit sales as well, we would write total sale, that is credit sales plus cash sale. Now, from the sales, we usually deduct the sales return. But again, in the cafe, there is no point of sales return. Most of the time, they don't get sales return. Okay, so therefore, there is no sales return most often. So after sales, there comes cost of sales. Cost of sales should also be relating to the canteen or cafe. We'll be starting with opening inventory, but remember, if it's the first year of the club, then there is no opening inventory. Now, after opening inventory, we need to add purchases. Again, the total purchase would be there. If it's credit purchase or cash purchase, we need to add both of them in order to find the total purchase. Opening at purchase, then we can deduct the closing inventory. The inventory that is left over, maybe there's a bottled waters remaining, or maybe the juices are remaining in the fridge and something like that. So this is the closing inventory. We are going to sell it in the next financial year. So we would be getting cost of sales. If we deduct beta cost of sales from a revenue, we can get gross profit. So sir, we will only write gross profit uh, if there are any expenses relating to canteen or cafe or shop, and if there are no expenses whatsoever relating to canteen, so what we are going to do, instead of writing gross profit, we'll be writing uh, refreshment or canteen profit for the year. Okay, we can just write canteen or refreshment profit for the year right away. Then there is no need to write gross profit when there are no expenses for canteen. But if there are expenses specifically relating to canteen or cafe or refreshment, we are going to deduct those expenses. For example, beta, we have rent. Now the total rent shouldn't be charged here. The examiner will tell you that how much of the rent relates to the cafe and how much of the rent relates to the rest of the club. So we are only going to charge the rent that relates to the cafe out here. Okay, so the cafe rent would be charged here. For example, it's 30% of the total rent. Then depreciation can also be charged here, and the depreciation should be for the assets that are actually used in cafe. For maybe there's a microwave oven or furniture that is used in the cafe or equipment. Okay, so we need to charge the depreciation for the assets that are used in cafe only. So if we deduct the expenses relating to the cafe from the gross profit, now we are left with profit from refreshment, or we can also write refreshment profit for the year. Okay, refreshment profit for the year. So this is the income statement for the canteen area only or the cafe area only. So there are some other things that we need to consider, and one of that is direct wages. Remember, my dear students, whenever an expense is given with the name of direct, for example, there is a direct wages. So the direct wages, if there are direct wages relating to the cafe, the direct wages shouldn't be charged as an expense. Instead, those direct wages should be charged in the cost of sales. So first we'll be doing this opening, add purchase, less closing. Now this value, cost of sales, we need to add direct wages in here in order to find gross profit. So just remember beta, if there is any expense relating to cafe directly, and it's written that this expense is direct in nature, okay, direct wages or direct expenses of the cafe, they should be charged not after gross profit, but they should be charged before gross profit. Okay, before gross profit. Then, beta, first of all, we need to make the refreshment income statement. The second part of the video, we are going to learn how to prepare the income statement of the club, and that is known as income and expenditure account.